There's a massive rally happening right now in gold and silver prices across India, and it is pulling in millions and millions of investors. But, this isn't just a story about numbers climbing on a chart. Not at all. It's a story about culture, about new technology, and most importantly, a critical risk that every single investor needs to understand. So let's break it all. To really get what's going on, you have to start here. This quote, it just nails it. In India, gold is so much more than just a financial asset. It is literally woven into the fabric of the society, of identity, of tradition. It's on a whole different level. All right, so first up, let's dig into these deep cultural roots, because that's what creates this incredibly powerful and, persistent demand for gold.
It's a really good question, right? Why gold? I mean, why is the connection so powerful in India, more so than almost anywhere else on Earth?
Well, this is where culture and just, practical life completely merge. See, in India, giving gold at a wedding or a festival isn't just a nice gift, it's pretty much an obligation. It's a huge symbol of your status and your wealth. But it's also your personal bank, especially out in rural areas where you might not have easy access to formal finance. It's your shield against inflation, and it's an emergency fund that you can turn into cash almost instantly. This is the bedrock of India's demand for gold. So that cultural foundation, that really helps explain the absolute frenzy we're seeing in the market right now. But what's happening in 2025 isn't just about gold. No, it's really a tale of two different metals. First, let's talk gold. We're looking at a staggering 67% gain in 2025. Now, to put that in perspective, that's its biggest annual jump in over 40 years. It's a truly historic rally, mostly driven by all the uncertainty in the world and people rushing to safe assets. But, and this is where the story gets really interesting, look at silver. It's up around 53% so far this year. It's actually outperforming gold. It isn't just getting dragged along for the ride. For a lot of investors, silver is becoming the main event. And I mean, the excitement around silver is it's off the charts. We're seeing reports that the money flowing into silver ETFs, those are the funds that let you invest in silver without having to buy the actual bars, is a whopping 3 times the amount flowing into gold ETFs. That is a massive, massive shift. So what in the world is going on here? What's driving this stampede? And maybe more importantly, how are people actually putting their money into these metals? Because the methods are changing just as fast as the prices are. And that leads us right into this huge, fundamental shift in how people are investing. We're talking about the move away from physical metal to digital financial products, and believe me, it is happening at lightning speed. Investors are facing this classic choice. On the one hand, you have physical gold. You can touch it, you can hold it, it feels secure. But then you've got the hassle, right? You got to store it, keep it safe, and you pay all these extra making charges if it's jewelry. On the other hand, you've got digital gold and ETFs. Super convenient, highly liquid, click of a button. But you don't actually own the physical metal, and that brings its own kind of risk to the table. And let me be clear, the move toward these new financial products, it's not some slow, gradual trend. It is an absolute stampede. Investors are diving headfirst into the convenience of digital. And you don't have to take my word for it. Just look at these numbers from 2025. They're wild. Net inflows into gold ETFs hit an all-time high. We're talking about almost $5 billion of new money. The total gold held by these funds hit 95 tons. And get this, the number of investors grew by 60%. That's almost 4 million new accounts in a single year. It's a revolution. Okay, but with all this excitement, there's a huge catch. A really big risk that you, as an investor, absolutely need to know about. This is the heart of the dilemma. It all boils down to one simple idea, something called the domestic premium. Basically, what it means is that because of the massive local demand and all the import rules, the price you pay for silver or gold inside India can be a lot higher than the global price you see on the news. So, how does this happen? How do you end up paying more? Well, let's walk through it with silver. First, you start with the global price. Then, the government slaps on customs duties and taxes. Then, because demand is so intense and there are shortages, the local physical price gets pushed even higher. And here's the kicker. The ETF has to go out and buy its silver at that inflated price. And the result? The fund you're buying into is valued at a price that can be anywhere from 5 to 12% higher than the actual global rate. So here's the bottom line, the part you really need to hear. You're essentially overpaying to join the party. And if that party starts to wind down, if local demand cools off, and that premium shrinks, the value of your investment could fall. And this can happen even if the international price of silver doesn't drop one single bit. You could lose money just because the premium vanished. That is the pitfall.
So where does all of this leave us? What happens next in this crazy shifting landscape? Let's just zoom out for a second and look at the bigger picture.
What we're really seeing here is India standing at a crossroads. It's this incredible tug of war between a deep, ancient, cultural love for physical gold, something you can actually hold in your hand, and the undeniable, crazy convenience of modern digital financial products. It's a clash between tradition and technology. And that leaves us with the big question, right? This whole digital stampede was kicked off by a historic market rally. But is this change here to stay? As India's wealth, its economy, everything goes digital, will its cultural heart still belong to physical gold? The answer to that question? Well, it's going to define one of the biggest investment markets in the world for years and years to come.